Welcome everybody to the German educator that talks English. I hope everybody has a great day. I hope everybody is very enjoying the blessings that B is really sending out to all of you all over the world. Um, we will have, oh, 1 second. We will have today a lesson. And I think everybody already knows about market structure, but what I want to make sure is that when it comes to supply and demand trading, you have to really be like a program. Okay, I see this every single day. I even make mistakes, but I'm a human being, so understanding market structure the right way is really something what is almost one of the most important things when you want to trade with supply and demand. Okay, and I wanna just say something real quick because I had a lot of mails and people who were sending me their charts, and I was just a little bit smiling because it was for me seeing all of you, and really I appreciate everybody because I love to see how you guys work. I love to see that everybody brings in that work, and even asking questions, that's important. You guys have to ask questions. If you don't do so, you don't get no answers, and I'm always open for that. So just make sure if you got questions, shout out, bring them to me, and I will answer them. But let's get back to I was seeing a lot of charts in the last, I think, in the last couple of days, which always remind me of my starting on trading. Everything was really, how do you say, everything looks like a rainbow. There are a lot of people out there that, using a lot of stuff, okay? And I understand you guys. I really understand everybody because I just remember when I started to trade, I want to learn that skill set, okay? I was really, I had this big desire to learn this skill set. And I was like you, I was, bringing every information I got, I brought into my chart. And later on, my chart looked like a rainbow. I had a couple of moving averages. I had a couple of lines in there. I had a couple of these and a couple of that. And at the end of the game, I did not understand why I was not able to, find the right stuff or be focused on the right things until I figured out that you have to see it this way. When it comes to trading, like I always say to you guys, is that for you guys warm? In Germany, it's so hot. I think, I don't know the American degrees, but it's 40 degrees Celsius. And the thing is in trading that you guys have to understand, when we hop into these markets, okay, you have to always you have to always keep that in mind. When you get into this market is manipulation poor, okay? What means if you tap in there, the first thing what they want to make sure is that we having this condition with being addicted on money, and honestly, everybody is addicted to money. It's like the social how you say that the social area made us addicted to money, okay? Because they want us to pay our bills, so we have to be addicted to get scared when we don't have this money. And that's really important to understand because that's the first part. When we get in there and you are working with money, you have to understand that the condition is still in your subconscious mind, okay? And when this addiction is in your subconscious mind, it will, you don't even see this, it will bring you to a point where you handle or make a decision, but based on a condition. Okay, and the condition is like, for example, greed or being scared, and this everything is based on being addicted to money. Okay, this is based on being addicted to money. So when we hop into the markets, we already have this problem. It is a problem. Okay, we have to see this as a problem until we work so hard on our mindset to understand this, to be aware that we are like addicted to money, and to understand that when we get into the market, this addiction will come, or is still in our subconscious mind, and will come up at some point. Okay, so this is already one problem what we all have in trading, or what even new people have. Okay, people that are more experienced, I think their mindset is good enough to understand this or to know this. But I want to bring that to you, though, so you always keep this in mind. So the second thing is, when we get into the market, we have to be focused. And that means the more we see, okay, the more we see, the more information runs through our brain. And the more information runs through our brain, and then even all these old conditions, at this point, that was my experience. I found out with a lot of going in reflection and thinking about what is going on and writing that down, and I really working on this really hard. I found out that the more things you have on your chart, even with knowing being some kind addicted to money, and then this addiction starts to bring you into a point where maybe greed or something like this comes, you're gonna start to get confused. And if you are in the market and getting confused because and I think a lot of people have this issue or this problem, not to know what to do anymore. Okay? Be there. Does the market do this? Or could he do this? Or what is when he does not do this? Okay? When you're in a kind of state like this, then I want you to take a step back, look at your chart, and figure out, is there too much where you eyes are focused right now on? For example, if there are thousands of different colors and thousands of different lines, this is all information what costs you energy and takes away your normal focus to be focused on the right things. I hope that makes sense. So the thing what I saw in all of these charts was, and honestly, I love you all for doing this, even, reaching out to me. I love that. Just do that. Always do that. Don't be afraid or something like that. I'm a really kind guy. So it always remind me, because I wanted to know how that works, and I wanted to bring everything together what I learned, and bring like a puzzle. See it that way. If you have a big puzzle, okay? And for example, you learn in one strategy, and now you take another puzzle, other strategy, and bring in some puzzle pieces of this and of this and of this and of this. How will your puzzle, or how will your picture later on look like? It will look crazy. It will look crazy. Okay? And believe me, I learned over, I think, 17 strategies. 17. And I brought every strategy somehow together. And at the end, I did not even know what to do. Okay? Because it was too confused. Sometimes the market reacted on this based strategy. and then it reacted on some points of this strategy, and then it reacted on some points of this strategy, and then later on I was so confused I could not understand anymore what to focus on. Okay? I want you all to understand this. This is really, really important. So when we learn different kinds of strategies, I want you to figure out, what does this strategy show me in the market? For example, I was teaching, or I'm still teaching, sequences. Okay, this is a totally separate strategy based on supply and demand. Okay, it is based on supply and demand. So when you now, for example, start to build up your trend lines and then bring in the sequences and put in some supply and demand puzzle pieces there, it will sometimes work out for you, but I bet at this time, and that's the biggest problem, if you start making mistakes, okay, or for example, the market conditions are really crazy, and you're hitting 2 or 3 times in a row a stop loss. Now the problem starts, because your confidence will get less, and now you start to take your strategy and move it around and do it some kind of other way. But think about this. Who knows if your strategy at this point is the problem? Nobody. And mostly it is not the strategy. You have to think about this. The markets are really manipulated. And there's so much fundamental stuff to do this extra to, break, say it this way, break structures, or let structures look a kind of different way, just to make the people confused. Okay? And at this point, when you work out with a strategy and it does not really work, now you're getting confused. Is it the problem of the strategy? But mostly it is not. It is not. It's just a time where the manipulation of the markets is extra made to confuse you, because the banks know a lot of people out there do not really stick to their one strategy. They're using a lot of different types of things. Okay? And how will you want to, or how do you want to find out now if your strategy is a problem, or even the market conditions? You won't. Okay? You won't. And that's the reason why we traders talk about we want to have rules, and we have to stick unto our rules. And even if it does not work right now, we still stick to our rules. And if it does not work, we are still risk managers and take care of our risk. And if we follow this, our rules and our risk management, there is no thought about, is my strategy right now correct or not? So the less you bring different kinds of strategies together, the less your chart is not so full of all this stuff. So your brain is not even, is not focused on 1,000 different things. The easier it is, the better you will trade. Okay? I want you really to keep this in mind. This is really, really, really important. So let's get back, because some of you might say, okay, why are you teaching us 2 strategies? Because if you learn different kinds of strategies, you only have to know for what to use this strategy, not to bring them together and trade them together, sometimes like this or sometimes like this. That's not the right way. the right way, for example, is I taught you guys the sequences, okay? So how do I use the sequences? First of all, I just build up the targets, okay, to see if where the market could go to. Now I also take them as a confirmation. For example, I just draw down my supply zone, and I take, for example, the extension, and just hold it on and see, okay, the end level is going until the the supply zone, which I already drawed out. This is for me now a confirmation. And then I use the 100%, because everybody already knows when the market breaks it or touches, it's an active sequence. When I know I am in an active sequence, I don't draw these sequences anymore in there. The only what I do is just to be focused on these levels and just start to trade on the normal, simple way of supply and demand with having my rules, and now bringing in the right way of seeing market structure. Because if market structure is not used right, okay, and I saw this on some charts, people were drawing out higher highs and higher lows and in different kinds of time frames. I did that too. I did this too, okay? But in knowing or really understanding market structure and understanding what I taught you guys with price swings, okay? Because a movement of a market which creates a higher high, for example, or a higher low, is called a price swing, okay? So let us real quick put this in here that everybody really understands what I'm talking about. Here. For example, everybody of you knows the wording a higher high and a higher low. Okay? A higher high and a higher low. And this is okay. Okay? This is okay. Everybody should know what that is. But to have a better understanding, what is a higher high or what is a lower low? Because only saying double H or HL, now I know what that is, that's not the right way. You have to understand that these movements, okay, these movements, for example, the higher low to the higher high is called a price swing. It's a price movement. And like I guys showed you, we want to understand market structure, but we also want to understand as an indicator the price. That's the most important thing. Okay? Normally we don't even need some moving average or something like this. We don't need this. We only have to see what is the price doing. Because when we work with the price and price swing, in this price swing, okay, in this price swing, there's our structure. So when I see this picture, I only have to understand that this movement, we call this now a movement. We don't call this anymore now a higher high or a higher low. I want to call this a movement. This is a price movement, okay, and price swing. And these are swing points, okay? Like everybody already, I hope you all tapped into the playlist. I was talking a little bit about market structure, but we're going to go a little bit deeper today. And we're going to learn this really that everybody understands this the right way. So when it comes to market structure, and I find the right, and I have to see it this way. When some of you, for example, want to really trade supply and demand, okay? And this is, in my opinion, this is the best way how you could trade. Why? Because you will be able to really work down with your risk reward on a you can break that even down until a 1 minute time frame. And that's really incredible because your risk reward can have incredible results, okay? I think there's nothing better than this. But I don't want to say that something else is bad. That's not the case. And when we understand to find, okay, to find the right swing points in a swing or in a price swing, in a price movement, we also will be able to find the right areas of demand and supply, which is based on this, okay? Which means, and I had this issue even, I think a lot of, maybe some of you have this, I had these problems to find the right areas in every kind of trading style I had, okay? And sometimes it worked on this area, sometimes it worked on this area, sometimes not. And at these days when it does not work, we all get confused. And then this starts with the conditioning, like I told you. We ask ourselves, is it now the strategy the problem, or is it me, or is it, what is it? And the more you get confused, the more, I wouldn't even say, people get depressed because they're losing money. Nobody wants to lose money. So, when we talk about supply and demand, you have to see it this way. Everything is based, okay? Everything is based, first of all, on market structure. Everything, okay? I'm gonna draw this point. This point only symbols that this is the right swing point, okay? Let me put this wording away that we're gonna stay in the same wording. Swing point, okay? This is also a swing point. In this swing point, okay, this movement is our structure. And in this structure, now for example, this is the swing point of a 4-hour time frame. This is the right swing high, the swing low. And now we talk in there about an internal structure. Okay? So we first of all have to we can go in the macro market to make it a little bit easier for you guys. But I want you to understand the first thing, what we really have to figure out the right way is the right swing points in market structure. Okay, and I'm going to show you why this is all based together. There you go. The first point, okay, what we want to figure out the right swing points in market structure. If we find them, we will be able now to build up our right areas, okay? Our right demand and supply zones. So, and when we now figure out the first step, the right swing points, we can now draw the right supply and demand zones. Now, and it's normally so easy, you just have to bring it and keep staying on these rules and don't bring something else inside. Now, we are looking, like I told you in my classes in the playlist, we are looking now for imbalance, okay, inefficient price action. Inefficient price action. Let me see, for example, how we can draw this to make it in pictures. I love to work with pictures. Okay? And what we now have to do is nothing else more than focus on liquidity. Okay? Again, this is number one. We have to understand and draw the right things, because the right swing points are based to our next part to figure out the right demand zones. And when we have the right demand zones, the only thing what we now have to do is qualify our trades and just see if from our zone, from our demand zone, is there inefficient price action? If yes, we now look for liquidity. One second. There you go. Then we look for liquidity, and after this, when these 4 points are together, without looking, is there maybe a trend line, or is there something where I colored up, or is there maybe a moving average telling me something, or is maybe something this or this or this? Forget all of this. Forget all of this. If you want to build up supply and demand and see it as a puzzle, and you want to have the picture, you want to have to use the puzzle pieces of this puzzle and just bring them together to see the right picture. I hope this makes sense. Okay? And if I bring the puzzle pieces together, this equals my setup. Okay? And after this, the only thing what I have to do now is be patient and stick to my plan, which means I'm going to do Sundays or Mondays or whenever. I'm going to do my markup. I'm going to follow just my rules, my 4 little rules, okay? Just for the beginning. It's a little bit more, but just my 4 rules. I'm going to build up my setup. And for example, what I do, you have here on the side where you can write something. There is the possibility to pick in a picture. Okay, to bring in a picture, and this is the way how I do it. I bring in my picture, and after making my setup, I'm going to bring in my setup my sign that I just fixed up this setup, and this is now my trading plan. Okay, even this a lot of people were asking me, David, how do I build a trading plan? With trading plan is only meant to make your setup, okay, build it up right. And for me, I just put on my trading setup this picture to remind me I made this setup correctly. I will execute after being patient when the market comes into my zone. That's it. Point. Not less, not more. That's it. And you will be really, comfortable with that. You will be chilled. You will be, really cool down. Okay? There's no reason to, I don't know, to be stressed or something like that. Even to be, depressed. Nothing of this is at this point useful to get to a nice trader. So again, if we understand this here, the market structure the right way and find out the right swing points, okay, in a price movement out of these zones, okay, out of these areas, we will now be able to draw out the right supply and demands only out of these areas. And then we only have to see, is there somewhere imbalance? And if yes, we already know market will come back. And now we have to search for liquidity like I already told you. This is the only way how markets make or how market makers earn money, with taking out liquidity. That's the way how they earn money. So we always have to ask us, is there liquidity to take out? Is there a huge amount, for example, for a bank to earn money? Yes? Okay, great. Now I got a nice setup. If not, why should I enter this market? That makes no sense. Okay? Which not mean that every trade will 100% work. That's not the thing what I'm talking about. But, and now we come back to the beginning what I said. When it comes to train your brain or to build up a program into your brain, and that's really important, we have to do things over and over and over again, okay? Normally, we say about 28 days or 30 days, and then this goes into our subconscious mind. And at this point, our subconscious mind, which is the powerful gift what we got on this planet, this is where our full potential is at. And this point now, your subconscious mind starts to make it automatically. Okay? But we have to get there. Now think about what I'm telling you. If we don't have this program not yet in our subconscious mind, and we are not doing the things automatically, and now see this picture, and you going in the market, and you have a good trade, and now the trade is bad, and now you start to change everything, and you're getting confused, then you are not training your program what has to do things automatically. Okay? Think about this. If you start to bring this in, doing things always the same way, it does not matter if you lose money. Okay, it matters if you're doing everything wrong, okay? But that's the reason why we're teaching you this. If you're doing this the every single day, the same way, and choose really a strategy where you feel comfortable with, and first learn this strategy that you are perfect in it. Learn this one strategy until you have it automatically inside, and then build. You're then at this point now you can be able to learn another strategy. But I really don't recommend to bring 1,000 things together. Okay, always see this picture of a puzzle. If you bring 3 puzzles together and try to put these pieces together, this picture won't look good. The first thing you have to understand is to create this program in the routine, in your daily routine, doing the same things over and over and over again. And at this point, I promise you, it's like magic. Your eyes will see the things you have to see. And everything what is around you is not there anymore. That's how I see the markets. If I go in there, it's like I feel the market's heartbeat. And I only see these focus things. Okay, that's because, for example, how I trained my program, I was sitting there 16 hours every single day, doing every single day the same stuff, every single day in the routine, over and over and over again. I have over 20,000 chart hours now, 20,000 chart hours, just to show you a picture. And only because of this program, what I trained, I am able to see now the right things, but I'm also able to learn new things without being confused. Okay? I hope this makes sense. This is really, really, really important. So let's get into that one point where everything is based on the strategy of supply and demand, which is market structure. And now we're going to go into market structure. And I want you to see the difference between 2 things. Okay? We talk about the macro market. Okay? And the macro market equals the 4-hour time frame. Okay? Is a 4-hour time frame. We're just going to talk about today the macro market, which is the 4-hour time frame. And we want to make sure to understand in the 4-hour time frame to find the right swing points. Okay? This is what we're going to talk about. So I want to bring in some rules for you to always stick to these rules and always do this the same over and over and over again. Okay? So when it comes to market structure, oh, damn. Okay, let's do it here. Or we can even build this up, and I'm going to show you then the macro market in the daily, okay, to understand the difference. So what we want to make sure, okay, some rules to understand market structure first of all. The only thing what we have to really be focused on is on 2 structure points. The first is a break of structure, okay, a BOS, which is a continuation in a trend or in consolidation. Okay? But we're going to use it first to be more focused on into a continuation in a trend, which means when market breaks this structure, the continuation of the trend or the trend will follow in the direction he is moving to. The second point which we want to be focused on is a change of character, which means that the trend reversal is about to start. Okay? Is about to start. Which means that, for example, in an uptrend, when market now shows us in the structure, which I'm going to show you, some types of movements, we can now already see and have an idea, okay, market is now going to turn over. But to understand this right, we have to figure out these points here, these right swing points. So I think a lot of you might do something like this, okay? And don't understand this wrong. I think it could be like this. People might draw something out like this, okay? Like this. Okay? This is not really this what we're looking for in supply and demand. What we want to know is, we don't want to see now the internal thing. This might be in the internal structure, may be good. But what we want to be, first of all, understanding is to find the price, the right price movement, okay? The right price movement, which market started and ended. Only when we know this movement, we will be able to build our strategy up. So I'm not able to get into the 4 hour. Let me try to show you this in a daily chart. So what we want to make sure is to really identify market structure and structure breaks, right? The right way. We have to make sure to identify them the right way, which means, for example, we would have an area here, okay? We would have an area here where a market tapped in. Now, for example, market moved farther down again, okay? Moved back down and came back up to this area, okay? Now, some people do this on the wrong way, okay? They see, for example, now a candle, and the candle is now pushing up with the wick, okay? Like this. And this is not a structure break, okay? This is not a structure break. I know a lot of people who will tell me, David, this is a structure break. For me, and how I learned it, and I know a lot of great, really great traders that is trading supply and demand. All of them, they say, okay, the body, and that's the important thing, and it makes, I'm going to tell you, it makes even sense, okay? Because think about this. In the candle, okay, in the candle is the time of trading, where people now trade the market. These wicks, okay, these wicks are only manipulation, okay? That's not the trading time. The trading time is in the candle. So when we already now know this, that the trading time is in the candle, how can then manipulation show me that a market broke a structure? That's not the right confirmation we want to have. We want to know that the trading time, or in the trading time of a candle, a market broke through an area. Only then, okay, only then we talk about a break of structure, okay? And when you really want to be really studying this, honestly, I did this 16 hours a day, only marking up, okay, every single chart, marking up with circles, the right swing points, just marking them up, marking them, only to train my brain, only to see the right swing points, okay? So if you want to really take this serious, I can recommend 3 nice markets where you really can learn this really good. This is GBP USD, Euro USD, and USD Swiss francs. They have a really nice structure. where we see nice, where we really can identify really nicely the structure breaks. Okay, so if you see, for example, now how I draw this, how this market or how the structure break has to look like. Okay, has to look like, and not some different kind of way. Okay, only when market breaks it with the trading time, with the whole, with the body. And what you now will see in the markets, if you study this, you will see, for example, areas where, let's put this away. You will see, for example, candles, okay? And like you maybe see this here, okay? It's only a little bit above, only a little bit, okay? But if you see something like this, that the market is only a little bit above, and then we have this identified as a break of structure, okay? The candle has not to go all the way through. It really, that's the reason why you should study this. The how you say, the more clear you see this, I even go in deeper time frames and really scroll it up to see only that the market just a little bit went above, to identify it as a market, as a structure break. And if I then see this, okay, let's say, for example, the market would now look like this, okay, would look like this. Now you already have, when the market now would go farther down, like this, went back down, okay, you can now identify this candle, not this one, this candle, even when the wicks, for example, would be on the same high, but you can identify it as a break of structure. And also what you can do is now mark up, when market drops a little bit more and more down, now you're going to mark it up as your swing high, okay, wherever it came from. But I'm going to go in this now as well. But this is something really important, what you want to make sure that you identify the right way, okay? So let's stick back into the markets. So what I always do is I really work really clear, and using here this arrow, okay, and tapping always in to these bodies, holding the tap, okay, when you press the tap button, you see it's always the right, it's always 90, I say it's always straight, okay? So for example, what can we see here? This is what I meant. We see that market just a little bit broke this structure there, okay, just a little bit. But this is now our swing point. Not this one, not this one, this one, because this is now the highest one. And like you maybe already can see, okay, if you now, for example, would figure out this as the right swing point, you will also, I don't want to confuse you, but then you will already be able to identify the right zone, which would be this one. And you also would now see market did not even tap in there, which means this area is now still not mitigated, which means when the market hits in this area, he will really hardly react, okay? But only figuring out the right swing point makes you figure out the right area. Like I said, everything is based point for point, okay? So with this strategy, or with this way, finding the right structure, okay, the right swing points, I'm working my structure further down to build now up every right swing point. So where did this price swing high? This is now our price swing high. Where did it came from? It came from here. Okay? It came from here. So this is now this is the reason why we call this swing points, because this is a price swing. Okay? And like you maybe already can see here, look how the market, okay, how the market went up, moved back down, where a lot of people would now say, okay, this is now a higher low, okay, which in this case it's not the right way to see market structure, because this price swing, okay, did not end at this area, okay. When this would be now our low, okay, when this now would be our low, or say this is our low, this is our high, and then the higher low, when this would be the higher low, then this would mean that this here is a swing, a price swing, and this again, okay, which is what I'm going to show you today, not the right way to see it. How you have to see it is, where did this swing start and end it? And like we can see, it's like a wave, and then it dropped down, okay. So this means this is the start of the swing, and this is the end of the swing. And now we have our swing low and swing high. And these are the right points to draw into your charts. Okay? So let's go farther. When we now have, and that's the important thing about it, when we now have the right swing points, now we are only based on these points. Not there, not there, not there. We are now focusing on these points. And the only thing what we want to see is this structure going to break? So the market is going to move in a continuation? Or is this structure going to break and the market is going to make a reversal? And we only can identify it on these points. Nowhere else. Okay? I hope this makes sense. So what we're now going to do is, again, now we have that swing point. We're going to take our arrow, okay? And what I always do is, like I said, I'm holding the tap. Okay, when you push this tab, you can make it the right way, straight. I just always, it's for example, there you go. I don't use this when this would break now. I don't care about this structure here. This is for me not interested right now. Okay? What I'm looking is the swing point. This has to break for me, nothing else. So when I just now look at the market, boom. You see, the market broke with a candle, okay, and the whole body. Even when it would be a little bit only, but when it breaks this area, now we call this. This is now the right definition of a break of structure. Okay? So I'm going to show you now how to build this up. 1 second. Again, what we're looking for is price swings, which means we want to know the start of the price swing and the end of the price swing. When you now look at this structure, okay, again, people would say, okay, this is the low, high, lower high, lower low, lower high, but it is not a full price swing. When does this price swing end? Okay, when does this price swing end? Like you can see, when the market really starts to retrace. For me, this is not really a retracement. The market just moving a little bit up, but this is not really a retracement. And what I now have to make sure, again, is from this whole drop to see where is the lowest point, okay? Where is the lowest point? And in this case, it's this area here. Okay? Now, I have the right swing, okay? The price swing. So, I think maybe somebody of you will be now a little bit confused. Why do you don't say this is a higher high, lower high, this is a lower low? Right now, we're still only talking about the higher time frame. I'm not able to get into the 4-hour time frame, but we're going to tap into this. But the most important thing to learn out this session is, or to learn out this information now, to figure out the right price swing. Okay? And like you can already see, here we have so much imbalance. Okay? Here, again, we have so much imbalance. Here, again, we have so much imbalance, which now has to tell you, hey, how could a trader, a normal trader, create these imbalances? David told me imbalances get created when a huge amount of money comes into the market. Exactly. Exactly. And this is the case. Okay? This is the case. 1 second. There you go. There you go. And this is the case. So, what this now tells you is that this whole movement is a movement of an institution. Okay? And this institution started his price or their price swing from the highest swing point to the lowest swing point. And now this here is the right area which you want to draw in your charts. So again, market now, we see market now retraces. Okay, market retraces up. And again, why do I say, okay, why does he take this as a retracement? Now look again. Again, this is all imbalance. Okay? This is all imbalance. This is an institution. Again, this is not a normal trader. Okay? So when you see something like this and you know, okay, now this is an institution. For example, let's say, for example, this is now the movement, the price swing all the way down here from the Federal Bank, the Fed of America. Okay? Which you now have to understand is that when they move their market all the way in this price swing down, and you see, for example, this huge amount here of money which came in, then you already have to understand, okay, this is the same bank. This is the same bank which moved their order from the start point to the end point where they took out their profits, for example, and now again opening a new order, okay, a new bank or institution order to bring the market farther up again, to only with one reason, now start again another price swing, okay, which means we can see this in this case here. The market is now on the highest point, and only when the market breaks this area, okay, our spring low, our price swing low or swing point low, only when market breaks this structure, what he did here, okay, then we wait until the movement moves all the way down and now pushes back up. And again, what can we see here? A huge amount of imbalance, which already now shows us again, this is a bank, this is not a normal trader. So this has to be an institutional movement, okay? Which means we can now identify the right price swing again. From this point he started, and this point he ended. Okay? This is now the whole price swing. So why is this now important? Well, because we only want to look at the points of price swings, okay? Only on these points for our areas of supply and demand. Okay? It's really simple. But we also, and now bring in two other structures we want to understand. First, we were talking about structure breaks. We're still in the first one, only the break of structure to identify them the right. In seeing when a price swing starts, breaks structure, and then ends into a retracement, then we have the end point, the next swing point, which then is the following price swing. Okay? And with only breaking with a body, which is the trade inside when people trade, only then we talk about breaking structure. Now, two other structures which we wanna I'm just gonna bring them in again like a reminder. We want to identify the rally-based rally structure and the drop-based drop structure. Okay, which is again a trend continuation. No, let's do it the other way to have a little bit more clear. There you go. Okay. When we talk about breakout structure, we always have to be now trained in our mind to also see the structure rally-based rally, which is a continuation. And looks like this: rally, base, rally, okay, and the drop, base, drop, drop, base, drop. And we want to make sure to understand another two structures. Rally, base, drop, and drop,
base, rally. Which we now bring together with a change of character, because these structures are trend reversals. Okay? And they look like this. The rally, base, drop, and the drop, base, rally. There you go. Okay? And I want to bring the structure breaks to bring it in their mind together to being focused on these structures, D2. And when we talk about a continuation, I want you to bring this together, the puzzle piece, to our breaker structure, to a rally base rally and a drop base drop. These are only 4 structures. And to have a better understanding, I also call only the reversal structures, only these 2, okay? Because these 2 are order blocks, okay? When we talk about a trend reversal, we talk about an order block. And this is an order block structure, okay? This is an order block structure. Seconds. And when we talk about order block structures, these 2, okay, we also call them this one, okay, a buy to sell candle. Why? Because the rally is a buy, okay? The rally is a buy, and then the market only buys to open the order up here to sell the order from the banks up, down, okay? That's the reason why buy to sell. And in this case, okay, a drop base rally is called a sell to buy candle. Buy to sell candle. Yeah. And now, to bring this puzzle piece together, there are only 4 puzzle pieces. Okay? It's not so much. It's really easy to understand. You only have to see these kind of structures. And the important thing about these structures is the area where we later on going to draw our demand and supply zones out. And why I'm telling you this right now, because I said that when we now identify our swing lows, okay, and our swing highs, we are only then focused on these areas to draw out of these areas our supply and demand zone. Only there or only there. But with understanding these 2 structure types, okay, a rally base rally or a rally base drop, rally base drop and drop base rally, you will be able to see on the structure, for example here, that, for example, this is now a rally, a base, a rally, okay? A rally-based rally. So when you now know the swing point, you don't draw, like I said, down here your demand zone. Now, out of the structure rally-based rally in a continuation, you draw your structure or your demand zone out of the base. Okay? This is only studying. The more you study that, the more you see this in the markets, the more you will the better you will see this. Okay? Don't be now a little bit confused when you just are. Just listen what I'm telling you right now. So when it comes back to market structure, okay, I hope this is clear. How to identify the right swing points, because these are important. Okay, we only need them. We don't need this yet right now in between. We don't need this in between. Later on, and we're going to have some more calls about market structure because I want you all really to understand this. Later on, when we figured out this area from there to there, now we can bring in supply and demand in the internal structure and then really trade nicely, okay, in these structures in there. But we first of all have to build this up. So let's get now into the macro, area, like I said, in the 4-hour time frame, because at this in this area you should start to study your market structure. Okay, let's go. There we go. Now we have here really nicely first these two structures, a breakup structure and a change of character. And with knowing now to figure out or to identify the right swing points, you will be able to identify and confirm a trend, for example, in the right way, but not even a trend. You will even be able to build up and supply and demand set up the right way. So what we now can identify here in a 4-hour time frame, okay, is let's say there. What can we see here? We see here in consolidation, right? And consolidation. So no, we have to go a little bit more. No, just let's start from this area there. So we see here in consolidation, but we also see the beginning of the market structure, which is the lowest point down here. Okay, which is the lowest point down here. And with knowing now the right swing point, and why did I choose this swing point, or why did I choose this one as a swing point? Because coming out, you see this here, market comes down. What does he do? He does not break this structure. Okay? He moves back up, retraces, and then from this point he breaks this structure. And like I said, it's really hard work because you really want to see, and this is a nice example. When we now take our arrow, now look, there you go. Now look how the market really only with a little piece, you see this? Just a little bit, the market broke that structure, but this little bit is now a really confirmed break of structure. Only this little bit. The market only has to go with a little bit his candle and break this structure. And then we talk about a break of structure when the candle is built totally out. Okay, not when it's still in the trade. So when we now see, okay, market broke this structure there. You saw here, he tried to break it, but this is only the wick. This is only manipulation. Okay? This here is only manipulation. The wick, only manipulation. then you see here the market broke through, okay, broke through. There you go. And at this point, we now see here that the market went up, build this high up here, this swing point, okay. This is not even right. Sorry. There you go. And this swing point moved, okay, all the way down here. So with now knowing this swing point, okay, with now knowing this swing point and knowing the one before where the swing point started, we will be able now to see when the market breaks this first swing point, which he does in this case here. Okay, which he does in this case here. So what I do is, I just take, for example, to see that the market is now starting to maybe change, but only with one break. This is nothing for me, okay? This is for me, this is an unconfirmed trend reversal. Okay? An unconfirmed. But it already shows bullish movement. Okay? So now I want you to see how important the swing points now are, because a lot of people would now make the mistake and try to find somewhere here there is supply or their demand zone, okay, which we not gonna trade because we don't even have now a confirmed area, okay. But when we now know the right swing point, which in case is this one there, we now already have the right area of demand. And like you can see, the market really hit this demand zone really nicely. Okay? Really, really nicely. So with knowing the right swing point, you know the right demand zones. Okay? So let's get back. What we now can see is that market already broke structure. Now I want to be really interested in this market. And what can we see here already in price action? Like we were talking about price swings. What are we looking in price swings? We are looking for price movement and somebody who has more amount of money than we have. Okay? What is this? We already see there somebody tapped in with a huge amount of money, which started now at this point here and nicely price swing, which already identifies or let us know, okay, we can now already be a little bit focused on bullish setups. So we did not confirm this market yet, okay? This break of structure is great really nicely because the candle already broke it through. This is only now for us a break of structure. So what we now want to make sure is we have our swing low, our swing new high, okay? And we already have our price swing here. So what we now can identify is that the market, okay, builds again bullish momentum. Also, with knowing the right swing point, also with knowing drawing out of the right demand zone. Okay, but don't be focused right now on the demand zones. I'm just going to draw them in that you see that it all makes sense. Okay, what I want you to do is be focused now on what I'm showing you with market structure. So what do we have to look for now? Okay, what do we have to look for now? So what we now already know is when we now mark up our right swing points, we now only want to make sure to see the structure breaks. Okay? The structure breaks of these swing points. So we have now this one broken. Okay? But which next swing point has the market now to break? Not this one. The one before, okay, in the bullish momentum. In the bearish momentum. This is now the structure which the market has to break to confirm. Is that right? Confirm. Our trend reversal. There you go. Okay? To confirm our trend reversal that the market is now going to move in the opposite direction. And when we see this, okay, not the first break of structure, the second one, we're just talking about the macro market right now, just to understand market structure better. In deeper time frames, we're doing the same, but then in the eternal structure, okay, but we're going to stay now in the macro structure to have the right swing points. Then we talk about a change of character, and this is a confirmed change of character, which we see here, that we now know the market is going bullish. Okay, now we already know market is going bullish. So again, where is our price swing? And this is now important. So this price swing here, okay, this is the whole price swing we were talking about in price action. This is now the whole price swing, with starting down there again, which is our swing point low, and this is now our swing point high. And why is this important? Because this one has to break again. Only then. We still know that we are in a continuation, and we know to look to what we're going to look for. Okay? So with knowing that this is the price swing, and not this a high, or this a low, or this a high, or this a low, now we also can see in structure the right demand zone. And what can we identify? And I'm just gonna say that don't be focused on this now. We're gonna make this an extra column, but what are we focusing on? We are now here, a rally. That's not nice enough. Rally. Base. Rally. Okay? This is a rally, base, rally. So where we're going to look for is at the area, first of all, by a trend reversal. Only by a trend reversal. Okay? We're just talking right now today about a trend reversal. In the area of a trend reversal, when market breaks this structure and shows up in change of character, then we look at the area where market broke. Okay? Why? Because we also see this huge amount here of imbalance. And like I said, now we have to mark out our area in the area of demand, in the base. Okay? Which is in this case, this area. Okay? You'll see it better here. There you go. What can we identify there? Okay? a really nice indecision candle, right? Like you can see here, a really nicely indecision candle, which does not look like in the 4-hour time frame, but the better you get in drawing this out, the better you will see this. So again, is this right? No. There you go. Okay, what are we focused on again? We are focused on our swing points, our right swing points. Okay? We know this is the swing high now. We know now to create our right demand zone. So where does market break again our swing point? Here you see it at this area. Where did market come from? All the way down there. This again is now our next swing point. What we now can see is that the market moved all the way up to there. And this is now the whole price swing move. Now, what is important about this one? Well, like we see up here, we broke this structure, okay? We broke this structure, which still is bullish. But what we also see is that the market is now moving downwards, okay? Market is moving downwards. And this swing point is the one what has to break, okay? Not this one. Not this area, not this area. All these areas we do not want to be focused right now on, okay? The only one is on the right swing point. When this one breaks at this area, now we talk again about a change of character, because we were here in a bullish movement, market now changed and confirmed, okay, confirmed us into the opposite direction. Again, why is this point so important? Because we have to know from where the market came to break in this area, and like we can see, market came from there. Okay, market came from there, build up this price swing. And to just confirm this a little bit, to make it a little bit more easier, to have more confidence, what can we see in this price swing? What is this? Imbalance. Again. And this also tells us that this price swing is made from a bank. Okay? This price swing is made from a bank. We now identify again a bank. And this is what we want to identify. What we also can see is, look at this candle here. This is now what I call a buy. Okay? Market buys up. Okay? A bank buys up. Opens their order, okay, and then sell off. Which means this is a rally base drop. Also, like I said, buy to sell candle. And when we now again have the right swing point, we now have the right area of supply. And everything, you see this already, everything comes together. Okay, like I said, structure, see the right swing points. If we have the right swing points, we can draw out our right zones. What do we look after this? The puzzle pieces, imbalance, liquidity, and then we have our setup. And we don't need no rainbow charts. We don't need no 1,000 strategies. You can learn them, but make sure that you really, if you stick to another strategy, then first learn this one. And program it in your mind that it makes or lets you do it automatically. And then learn another one. But not start to bring 1,000 things together and always doing it different, because then you're not programming your mind, or you're not programming the program. It is important to understand this, to program, to build a program every single day doing the same things. Okay? I hope that makes sense for you all. Let's go a little bit farther with market breaking or structure. So what we can see again, market broke at our last swing point. Okay. Again, went up. We got another swing point. Does market break it? Yup. And now look. This is the whole bank move. This is the whole swing. Okay? And only now I can identify the start and the beginning. Again, when I got this point, market goes back up to the last point, and we don't use this. We don't need this here. We don't need this. What we need is this point. And you see market comes in near. This is only building liquidity for early buyers, but this is still the whole move. Again, swing high, swing low. These are the right points. Okay? How can I be sure that this is the right swing, okay, from a bank? Well, again, what do we see here? Imbalance. 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 This has to be a bank. This cannot be a trader. Or this has to be an institutional. Okay? Just to identify the right way. Let's get back. When does this, or when do I now see that the market is going in the opposite direction? Or when can I confirm it? Well, with using the swing point. Again, this structure has to be broken. And it breaks. Where does this whole swing come from? Starting from there. What is this called? Unconfirmed. Trend reversal. Okay. Unconfirmed trend reversal. Do we see something higher? No. What does market do again? Market, look. This is how banks work. You have to see it this way. And that's really crazy. Buyers think that the structure was now broken. Now, when they not know that they're in a confirmed trade or in a confirmed trend reversal, banks do something like this. Look, and this is only building liquidity. This here you can see again is manipulation. There. Okay? This is manipulation. But the interesting thing about it is, for what? Okay? The reason is, you have to see it this way. On this area now, okay, are buy stops. Which means people set their trades because they now think this is a bullish market. They set their trades there. And when market hits this area, for example, for everybody who does not know what a buy stop is, when market hits this area, now the idea of a buy stop is that the market moves up. Okay? But banks, they open them. Okay? They open it, and these are institutionals. This is an institutional reference point. This is an institution, in a hedge fund. They open their buy stops, and now they're going to hit them out. Okay? Just to understand the reason why, what's going on in this area. Just to understand this a little bit better. So what do we see? Again, what do we see? We have our swing high, okay? All this in here is not interested for us. We want to make sure that the market breaks again this structure, okay? We want to make sure that market breaks this structure. And now again, market broke this structure, but where did the price swing come from? Okay? At this point. Okay? So now just for example, let's take our Fibonacci, just to make this a little bit clear. We see our Fibonacci. Where is the market in which area? In our discounted area where we want to buy, right? In the right area. But only with understanding the right swing points. If we got them, we figure out the right area. When we now, for example, would go in a daily, let's see, maybe we see something better. What can we identify there? What is this? From there to there. This is an indecision candle. Okay? Look, this is an indecision candle. Boom. Okay? We can now make it specific, more specific in a deeper time frame, but I just want to show you when finding the right and understanding market structure on the right way, finding the right swing points, you will be able to find the right areas which are based on the right structure. Okay? So again, what can we identify? We can identify now the price swing high. Okay, we can identify the price swing high. What can we see in this structure? Rally, base, rally. Okay, what do we know about a rally base rally? Why is this so important? Because we take our demand zones not out our swing point. When we see the structure, we want to make sure to take our demand zone out our base. Okay? And our base is this. Okay? We can make that more specific. That's no problem. But first, to really see why this is so important, and then being able to find the right areas. Okay? So, again, what do we have to understand now in this case here? What do we have? The first thing, what do we have is to understand, okay, this is now an unconfirmed trend. Okay? Where is... I'm sorry, that's not right. I'm sorry. Sorry. I did not see this. This here is our swing low. Okay? Our swing high point, which created this swing in price. Okay? And now, what can we identify? We see our last swing low here, or where the market broke. Okay? And now this is our break of structure. Sorry, that was wrong from me. There we go. Now, because market broke there. Okay, and now broke this last area here. Okay. And now we have the confirmed trend reversal. Okay, with the change of character. Why? Because here, this is unconfirmed. It's only the first break which is not confirmed. Okay, now market broke our swing point there. Now we have the confirmation that we're now again in the bullish trend. Okay, market is moving over into the bullish trend. Again, what can we see? This swing point came all the way from this one. This is a break of structure and continuation. Okay. What can we also see? Again, Rally, base, rally. Okay, where do we draw our demand zones out? Out of the base. Okay, what can we identify here? Let me see, in the 4-hour time frame. We see this rally. Market is consolidating. Okay, this here is the whole consolidation. Okay, this is the whole consolidation. We're gonna do this next time in the next calls, but finding out now the right area, which will be in this case here, to make it a little bit better seeing. And what we can identify now is, there you go, boom. You see the market hits this area really nicely. Okay, with having, for example, here our target. $276 pips. Okay, 276 pips is a nice trade. Again, what do we see? Market here, you see market comes all the way down, okay? Again, this is the rally base drop, rally base rally. We always want to make sure to identify the right area there, okay? So when we, for example, now just say what is important, that market does not break our demand zone or our break supply zone. If market does something like this, it's a change of character. But these are also some other lessons we're going to take in the next calls. But like you can already now see, again, where is my next swing point? The next one is here. Why? Because this one created again, or broke this structure, which allows me to identify again the right swing point. Okay, so, and when you build up the market like this, you will have, first of all, the training of creating the right points. Okay, really, I would be really glad if you guys really study this and do it all again every single day. When you already know how to do it right, try, look, do it this way and see if you're really right. If not, do this over and over again. Okay, and just take a nice market where you see nice structure, and later on, when you go on and on and on and on, the market later on will then see, or you will be able to be on the end and to create nice, really nicely setups with supply and demand. Okay, and yeah, I think this is really we got again almost 2 hours. I am not able to get this done in 1 hour. Never, and I will never be able to. So, let me get quick to you guys. Let me see if you got some questions. Okay. Is somebody out there who has questions? If yes, bring them out. Let me see if I can answer them. But I think this was I think so. Really easy to understand. And like I said, try to study that. Okay, really the right way to get comfortable with it and to train your brain. Always think about this. Train your brain. Train your brain. You have to build this program. The more you do automatically, the less you will do out there getting shaped from the market. Okay? So, and when you build up the market like this, you will have, first of all, the training of creating the right points. Okay? Really, I would be really glad if you guys gotta get better really light. Study this and do it all again, every single day. When you already know how to do it right, try, look, do it this way and see if you're really right. If not, do this over and over again. Okay? And just take a nice market where you see nice structure, and later on, when you go on and on and on and on, the market later on will then see, or you will be able to be on the end and to create nice, really nicely setups with supply and demand. Okay? And yeah, I think this is really, we got again almost 2 hours. I am not able to get this done in 1 hour. Never, and I will never be able to. Okay, family. So if you got questions, I'm gonna be in Sense. Just post them in there. I'm gonna be the next 10 minutes in there. Yeah, and with this said, and I hope you learned today something really nicely. If not, then go back into the recordings, watch it over and over. And if you got questions, just ask me. Try to get to you as soon as possible. I love you all. Have a nice, blessed day. And we see us on, let me see what we got today, on Thursday. Okay? I love you. Bye. You got to keep it in my tempo. Write it up, don't stop. You know your body is a tempo. Write it up, don't stop. You got to do it in my tempo. Write it up, don't stop. You know your body is a tempo. Smoke it, pass it, puff it, hit it, hold it, push it, break it, down for me, come in, smoke it, pound with me, crush it, roll it, light it, smoke it, pass it, puff it, hit it, hold it, push it, break it, down for me, come in, smoke it, pound with me.
한대 피고 산을 같이 놀자.
Push it, roll it, light it, smoke it, pass it, puff it, hit it, hold it, push it, break it, down, flip it, come it, smoke it, pound, bring it. Push it, roll it, light it, smoke it, pass it, puff it, hit it, hold it, push it, break it, down, flip it, come it, smoke it, pound, bring it.